Hey, good afternoon, everyone. Trader Tim here from eminimine.com. I'm here to help you improve your trading so that you can become financially free and live the lifestyle that you want. And in this video, we're going to talk about trade from today, the significance of closing at a new high here in the ES, and a couple other good things. So the first thing I want to run through is kind of my thoughts from the morning. So, with the gap up, because it was occurring at highs, I have kind of the opposite sentiment of a gap up down at lows. So, when we're gapping and it's occurring in the form of a gap up after a pretty decent move up, I mean, we're talking about 200 points, a little more than 200 points in the ES. And when I see a gap up occur, I'm thinking, okay, that's a move that's likely going to be faded and lose a lot of steam. Whereas a gap up at lows after a downtrend is one that I want to be a buyer of to be getting into that new trend. So right off the bat this morning, I'm thinking, okay, we're gapping up into new highs, but the close from yesterday is all the way down into 29.33 and a quarter. So, that's basically 30 points for us to sell off before we even, that would just fill the gap. And so one of the scenarios I envisioned was, a bigger body bearish day up from here. Another scenario I thought of is, okay, maybe we do sell off, but then rally a little bit, but close below the all-time high. And then the third scenario was, okay, if we sell off and kind of tag the gap fill and then rally, if we can close above making a new high above 29.56, that would be the highest close we've had in the ES, and that would show a lot of strength because in order to come back from a big sell-off, we would need buyers not just to come in and buy or kind of take the opposing side from the gap fill trade, but we would need some substantial buyers to then push us all the way back up to where we closed, or where we opened, excuse me. So we're not necessarily clear sailing from here, but closing in an all-time high is important. This sort of hanging man pattern is still considered bearish. The other thing to think about is on the calendar, we have expiration tomorrow, and third Friday of the month, March, June, September, December, and that could be a little bit of a screwy day, but a lot of times the expiration days are tend to be up days. So we'll see what happens tomorrow, but just keep that in mind. Rollover already occurring last Thursday, so you should already be trading the September contract. And then the last thing about kind of this gap up at highs is actually, let me pull up the market profile because I left it on here. So all of this yellow area was an unfilled gap. Here was an unfilled close. This was actually a gap down, and this was the close. And then this area, all of this yellow, was price that had not been traded since that gap down. And so when we gap are on the way back up, we actually gapped through it. So we were opening way up here. So I saw this area as a potential magnet for us to sell off to, and even more so if we look at these single prints from yesterday, very thin trading. It makes a lot of sense that we could come into yesterday's range to about this 29.35, and this is the only unfilled gap that we have. So the fact that yesterday's market profile got wider right here, makes a lot of sense why the market can push through pretty easily where trading was light, but then all of a sudden where trading was heavier, it's met with support. And when we get this kind of V reversal, I'll go back to the chart here, like so, where you get a really deep intraday V that doesn't really lead to a serious pullback coming out of it. So not really a halfway back setup to capitalize on the other side. These tend to be chased, if you will, because there's no initial halfway back long setup, and then all of a sudden the market is kind of making its way back up into that first 30-minute range and on its way through to the top of the range, and without any bigger pullbacks along the way, uh, folks are stuck chasing, and that can really accelerate things into the close. So that's kind of the bigger picture from where we're at with today's gap up. I have drawn an extension on the daily chart. That was the other thing I wanted to point out. So if we come back down here from kind of the start of the year, we had this high to high that pulled back. That was like the first pullback after the uptrend began. We had a low to high here that didn't tag the 50, and then as you can see, the next low to high didn't really tag anything, any 50%, no matter what highs you use. But we did have an extension that went from highs up to highs, and then that low to highs had a reaction to its 50%. So I went back and drew from that anchor point, because a lot of times when you start a trend and you get a setup, whether it's an extension or a traditional 50%, if the first one works, you get these computer programs that are kind of latching on to those numbers because they can be easily quantified, and those same anchor points will be used later on down the line. So that high to all-time highs, or as it was before today, lines up pretty nicely down here with the pullback. And using that to give us a target, it shoots us up to 30.58. And so, like I said at the open, I don't think that we'll necessarily go straight there without any sort of pullback. But now that we're entering into open space, like there's no resistance to the left, I'm not going to rule it out. So keep that in mind as we are about 100 points away from that target. Intraday, today I only had one trade, and the sentiment going into the morning, like I said, was that a gap up at highs might lead to a sell-off. The first 30-minute range was pretty choppy. I didn't, I always mark the high and the low of the first 30-minute range, and we had right off the bat, like in the first 10 minutes, a short setup that couldn't break lows, and then when you turn it around, the long setup failed its 61.8, and then we were just kind of back and forth in the middle of the range. So I tried to stay out of that mid-range area as best I can. But then once we broke down below the first 30-minute range, I just grabbed from the swing high before to the low that broke the 30-minute range, and then used 29.56 1/4 as the short. It was just pretty much right at the bottom of the first 30-minute range, and those make for great setups. You're probably thinking, well, why not pull from highs down to lows? And I did draw this up, and if you look at the 50% of the high to low versus the anchor point that I used for my entry, we've got a 29.57 versus a 29.5650. So using the entry here, 56 1/4, and if I add my 1.5, 56 and a quarter. That gives us a 57.75. So easily outside of the 60.18 of this retracement. But then if I look at the larger short, 57.75 is good ways beyond its 50%. It's not quite outside of the 61.8, but I figured if we were going to sell off, if we're going to rally and then roll over, then it's likely to happen close to the bottom of the first 30-minute range, and we had these lows that could act as resistance. So when I get two setups like that are pretty close to their 50%, we're talking 2-tick difference, I'll usually go with a little bit more aggressive entry and then just keep that same 6-tick stop. So that one rolled over pretty nicely right away, and it had a good target down at 50, 29.50 50s. What I ended up doing here on the way down, because I drew, so we started selling off, used this the swing high as a place to tighten my stop, and then the next couple of swing highs in here worked nicely for places to bring my stop down. And then I looked at the distance from the entry to target, like where the next setup would be, and that was about a 53, and then this target was down here, about 50s, 50 even, so we're talking about 3-point difference. We started selling off fairly hard. This last ditch lower was only occurring over barely a minute, and so I just started trailing my stop above each candle's high on the remainder of the position, and then ended up getting out down here, just above the target. So sometimes I will put a order at the target. I try not to exit the entire position, because sometimes if we start selling off, we can really sell off hard. But in this case, you tighten your stop on the way down, you still have open-ended profit potential, but if it does reverse, then you get taken out of the trade for just a couple ticks worse than if you would have used the target. But if this would have kept selling off for another 3 or 4 points and you keep trailing, then you end up more ahead on a trade like that. So that was the only trade that I took this morning, because then the next one came up here, and the prior to this short here, it was a pretty messy morning, and this was really the only kind of 50% right down to the negative 23% target. We didn't have a low ticket lows, and I was figuring, well, if we roll over here and then break lows significantly, like by a couple of points, then maybe I can look for another entry. But we only broke by about a point and then rallied pretty hard, so it was starting to feel like we weren't able to break down quite with like quite as much force that we would need to really make it a strong sell-off. The kind of that what I was sort of looking for, this sell-off here didn't occur till a couple hours into the day. It was really over the lunch hour when we had this stronger sell-off, and then that turned around, that V right here, that V reversal, and then there wasn't really a low ticket lows. We just kind of came off of the highs from the last couple of days. So I didn't, I never feel bad about missing out on a bigger sell-off, because pretty messy here, and even in these next couple retracements, we were not breaking down below lows much, whereas like here we sold off, we broke below the first 30-minute range and moved 1, 2, 3, 4 points. That's a convincing break below lows. And then over here, sold off, close out of the position. We're kind of getting towards that hour and a half mark into the day where typically see more of a reversal if we're gonna get one, and so I just didn't at the time feel that confident that we were on our way to a kind of strong series of shorts, and you know ended up getting a couple of nice moves lower, but in the process was fairly messy. So that's kind of where I was thinking or where I was at in my thought process. So let's see, just running through my last couple of notes. I think that's everything for today. Be careful tomorrow with the uh, expiration, and if we move higher, that would definitely be I would definitely take some stabs at a move into new highs, because we could easily get a 30, 40, 50 point candle, nice trend day to the upside, because there's no resistance over here to the left. So it's not that I'm anti-short, but the longs might get some easy momentum if we open up and then move higher. So I hope everyone has a great weekend, and if you have questions, go ahead and leave them in the comments below, and I'll talk to everyone soon.